All right, traders, what's good? Let's break down the real state of this market using nothing but raw price action. No indicators, no hype, just structure, momentum, volatility, and what price is actually telling us. First things first, we are not before the move anymore. We are during the move. So let's start with the triple Qs. Look at the weekly chart on the triple Qs. Right away, you can clearly see the breakout and expansion phase already underway. Price reclaimed prior structure, pushed through resistance, and expanded aggressively higher with almost no meaningful pullback. That is not pre-breakout behavior. That's active continuation behavior. And from a raw price action standpoint, the structure is still bullish. Higher highs, higher lows, and strong continuation candles. Moving down to the daily chart on the Qs, this is where it gets interesting. Look at how vertical this move is becoming. Multiple expansion candles, very shallow pullbacks, almost no rotational balance. That tells us something important. The market is becoming extended. But here's the distinction traders need to understand. Extended does not automatically mean bearish. A market can be extended, exhausted, and overbought without actually reversing. And that distinction is where most traders get destroyed. Strong bull markets often look irrational near highs. That's normal trend behavior. Now, the key levels on the triple Qs are 688 to 693 is the immediate breakout support zone. Then 670 as major continuation support. Then 650 as deeper structural support. As long as price continues holding above those zones and buyers defend structure, bulls remain in control. On the weekly chart on SPY, same story here, higher highs, higher lows, and continued bullish structure. There is currently no confirmed higher time frame structural failure. Now look at the daily chart on SPY. Notice how price accelerated aggressively once it broke out of consolidation. The market stopped rotating and started expanding. That tells us buyers are still in control overall. But the more vertical price becomes, the more vulnerable the market will see sharp pullbacks, volatility expansion, and fast corrective moves later. Not necessarily because the market is bearish, but because auctions eventually rebalance. Now for SPY, the key levels are 710 is the immediate support zone, then 690 as major continuation support. As long as SPY continues accepting above those areas, the broader market structure remains bullish. Now let's talk volatility. Look at the weekly chart on the VIX. This chart is extremely important right now. The VIX is making lower highs while staying relatively suppressed. That's a classic risk-on environment. Fear is compressed. Dip buyers remain aggressive, and volatility expansion keeps failing. That supports the bullish continuation case. But suppressed volatility also creates complacency, and complacency is usually where fast corrections are born. Now move down to the daily chart on the VIX. Notice how volatility spikes continue fading instead of expanding persistently. That tells us the market still does not have sustained fear pricing built into it. So mechanically speaking, we do not currently have confirmed bear market behavior. And this is important. There's a massive difference between market exhaustion and actual trend reversal. Exhaustion means momentum slows, pullbacks deepen slightly, buyers become less aggressive, and price begins rotating sideways. A true reversal requires something completely different. Lower highs, lower lows, failed reclaim attempts, and sustained downside acceptance. We do not have that yet. Now let's bring everything together. The triple Qs are leading. SPY is confirming broader market strength, and the VIX remains suppressed. That combination still supports bullish continuation overall. However, the market is becoming increasingly stretched. That raises the probability of a healthy correction, a consolidation phase, or a pause in momentum, not necessarily a bear market. And this is where patience matters. Late-stage bullish expansion is where emotional traders start forcing entries, predicting tops too early, and fighting momentum without confirmation. Professionals wait for structure to fail first. Not feelings, not opinions, not headlines. Price action first. Structure first. Confirmation first. Look at the monthly chart for the triple Qs. This is the big picture. The long-term structure is still intact. Higher highs, higher lows, and continued bullish trend continuation behavior. There is currently zero confirmed bear market structure on the macro time frame. So the current market state is this: bullish, but increasingly extended. Momentum remains alive. Buyers are in control. But risk management matters more here than aggressive chasing. So stay patient. Trade structure, not emotion. Stay sharp. Ciao.